Welcome to the video. Today we'll unpack a little known but urgent issue. How getting married can immediately jeopardize your health savings account eligibility if your spouse has a general purpose FSA. We'll review the rule, the monthly eligibility timing, what to do right away, smart benefit adjustments, and how to avoid IRS penalties. We'll also include a couple of quick quizzes to reinforce your understanding and a clear set of steps to take. Let's get started. Here's our roadmap. First, we'll define the core rule that causes the HSA-FSA conflict. Next, we'll explain how monthly eligibility works for HSAs and why your marriage date matters. Then, we'll outline immediate action steps. After that, we'll compare a general purpose FSA with a limited purpose FSA. We'll also cover potential penalties and how to fix issues. Finally, we'll wrap up with key takeaways and next steps. Let's establish the context. After marriage, your spouse's general purpose FSA can be considered disqualifying coverage for HSA purposes if it covers the family. That can immediately eliminate your HSA eligibility and make continued HSA contributions, an error that triggers taxes, and a 6% excise penalty on excess contributions. We'll break this down in a practical way and show you how to adjust your benefits to stay compliant. Here's the core rule. To contribute to an HSA, you must have only a qualifying high-deductible health plan. Any other disqualifying coverage terminates HSA eligibility. A spouse's general purpose FSA is treated as disqualifying coverage if it covers the family, and that includes you. If that's in place after marriage, your ability to contribute to your HSA ends. If you continue contributing, those contributions may be excess and subject to income taxes and a 6% excise penalty. The flowchart illustrates that as soon as any disqualifying coverage exists, eligibility is lost. Timing is crucial. HSA eligibility is determined on the first day of each month. If your marriage occurs after the first of the month, your contributions for that current month and earlier are typically valid. However, beginning on the first day of the following month, your eligibility can be lost if your spouse's general purpose FSA covers the family. Because marriage is a qualifying life event, you usually have a defined window to make changes to avoid losing eligibility. The timeline visual highlights these monthly checkpoints. Here are your immediate actions. First, stop HSA contributions right away if the spouse's FSA covers you. Next, use the qualifying life event window to change benefits. The optimal move is often converting the spouse's general purpose FSA to a limited purpose FSA that only reimburses dental and vision expenses, which does not disqualify HSA eligibility. Alternatively, have the spouse cancel or waive the general purpose FSA if allowed by the employer. Confirm with payroll that HSA contributions stop and adjust your future contribution plan. If you already made ineligible contributions, contact your HSA custodian to request a return of excess contributions before the tax filing deadline to avoid or minimize penalties. We'll cover penalties and deadlines shortly. Moving forward, let's test your understanding with a quick question. Quiz time. The question is, if your spouse's general purpose FSA covers the family after marriage, what happens to your HSA contribution eligibility? Option A. Nothing changes. You can keep contributing as long as you have an HDHP. Option B. You lose eligibility to contribute to your HSA until the FSA is limited or waived. Option C. You can contribute only up to half the annual HSA limit. Option D. You can contribute, but only through payroll deductions. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. A spouse's general purpose FSA that covers the family is disqualifying coverage, and it stops your HSA contribution eligibility. Converting the FSA to a limited purpose FSA, or having it waived, can restore eligibility. Let's compare the two types of FSAs. A general purpose FSA covers medical, dental, vision, and prescriptions, but it disqualifies HSA eligibility if it covers the family. This is the source of the conflict. A limited purpose FSA restricts reimbursement to dental and vision expenses and does not disqualify HSA eligibility. This makes the limited purpose FSA a strong pairing with an HSA. During a qualifying life event like marriage, many employers allow switching from a general purpose FSA to a limited purpose FSA. If you contributed while ineligible, act to correct it. Before your tax filing deadline, request a return of excess contributions from your HSA custodian, including any earnings attributable to those contributions. This helps avoid the 6% excise tax. Stop future contributions until your eligibility is restored. Keep all documentation and ensure your tax forms, including Form 8889, reflect the corrections. Next, let's visualize the overall decision process from marriage to eligibility. This decision map begins when the marriage occurs. The first branch checks whether the spouse has a general purpose FSA. If not, or if they have a limited purpose FSA, HSA, eligibility can continue provided you have only an HDHP. If the spouse does have a general purpose FSA that covers the family, HSA eligibility becomes ineligible. The resolution paths are to switch the FSA to a limited purpose FSA or cancel the FSA if permitted. After making changes within the qualifying life event window, eligibility is reassessed on the first day of the next month. The diagram highlights both the QLE window for changes and the monthly eligibility checkpoint that determines when eligibility is regained. This table summarizes scenarios and responses. When a spouse's FSA disqualifies HSA eligibility, the risk is excess contributions and the 6% excise tax. The action is to stop contributions and switch to a limited purpose FSA or cancel the FSA within your qualifying life event window, which is commonly around 30 days but may vary. If excess contributions have already been made, request a return of excess, including earnings, by your tax filing deadline, including extensions. If no changes are made after marriage, you remain ineligible and should correct your plan elections and payroll immediately, keeping in mind that the next first of the month is the eligibility checkpoint. Here's a second quick quiz. The question is, HSA eligibility is determined on which schedule? Option A, annually on January 1st. Option B, quarterly on the first business day. Option C, on the first day of each month. Option D, only at open enrollment. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is C. HSA eligibility is determined on the first day of each month. This timing can protect earlier contributions if you marry after the first, provided you make changes before the next monthly checkpoint. A few advance notes. Your tax household is merged after marriage, so do not assume separate employers mean separate benefit rules for HSA eligibility. Coordinate elections before the next first of the month. Ask Human Resources about switching to a limited purpose FSA during your marriage qualifying life event. If you have ever relied on the HSA last month rule, remember the testing period implications if eligibility changes. Finally, document all benefit changes and confirmations with Human Resources and your HSA custodian. Here are the main takeaways. HSA contributions require that you have only an HDHP and no other disqualifying coverage. A spouse's general purpose FSA that covers the family is disqualifying. Eligibility is determined on the first day of each month. Use the qualifying life event to switch to a limited purpose FSA or cancel the FSA. If you have excess contributions, correct them before your tax filing deadline to reduce penalties. Disclaimer. This video is for educational purposes only. It is not tax, legal, financial, or benefits advice. Benefit rules vary by employer and plan. Consult your HR department. Review your plan documents. Contact your HSA custodian. And speak with a qualified tax professional regarding your specific situation. To wrap up, recognize that marriage can unexpectedly end your HSA eligibility if your spouse's FSA is general purpose and covers your family. Use the qualifying life event window to switch that FSA to a limited purpose FSA or cancel it. Stop HSA contributions immediately if you think you're ineligible, and fix excess contributions promptly. Finally, recheck eligibility on the next first of the month and resume contributions when your coverage is compliant. Here is a concise next steps checklist. Review both partners, plans, and FSA types immediately. Email Human Resources to request a limited purpose FSA switch or cancellation under the marriage qualifying life event. Contact your HSA custodian to request a return of excess contributions if necessary. Set a calendar reminder for the next first of the month to reassess eligibility. Finally, update your contribution plan once eligibility is restored. Before we close, let's finish with a creative call to action. Thank you for watching. If this helped you avoid a costly mistake, please like the video, share it with a newlywed friend, and subscribe for more smart benefits and tax content. Drop your questions or your own experience in the comments. We'd love to hear how you navigated your benefits after marriage.